Hello everyone, you're welcome back. TechRiz here, and you're welcome back to the 2025 mentorship for beginners. So we are going to be talking about candlesticks, right? Ultimately, this is one of the first and the most important thing you need to know as a technical analyst, right? Candlesticks. Now, what are candlesticks? You must have even been hearing of this word even before you made the decision to actually start learning how to trade. It is something that is like undeniable in our daily activities. We get to hear it a lot, right? So on my chart currently now, sorry I had to use this layout that has this color. Just I don't want to confuse you guys, because if I use the other color, some persons will be like more, but your own now, the peach color is the one going up and all of that. So basically, let's start from the ground up. There are two types of candlesticks, or there are two colors the candlesticks display. Now, the first color it displays is what? The candlestick either displays what? Green, that's if you're getting it for the first time. And green tells you what? That the market is what? Bullish. That's the word. Bullish, by bullish we mean a bull-ish. Now, let me explain why that word came about. Now, you know that when the bull wants to actually attack something, it's kind of like he uses his horn, drops lower to the floor and then, lifts the thing to the air. You've seen a bull wanting to attack a person before now. You see how it like tries to like come from the under and take the person up. The direction of the bull's attack is always what's up. So when the candle is up, we say it's bullish. The candle is going up. And then the bear, which is the red candle, which is when the price is what falling. I don't need to explain to you what's red. Red is danger, red is bad, red is whatever. So when the candles are red, we tag them to be what? Bearish. The same way we explained the bull one is the same way the bear is. When a bear wants to attack you, it clamps down on you from top to the ground. That's how it does. It like maws you to the ground. So whenever you see a red candle, or when you are in the bearish price action, we are saying that the market is declining, the market is going down, the stock price is going down, the forex, the commodity price is going down, the currency price is going down, whatever it is, right? So you need to get this at the back of your mind, right? At the back of your mind. So there are four makeups of a candlestick. I would have to prop up my own candlestick so that I don't distract what's on the screen. So this is my own pop-up of what a candlestick looks like. I'm going to do it side by side so I can explain to you guys. And I want you guys to pay attention and also make sure you're with your notes, because like some things I'm going to say here are going to help you forever, because like literally these things are going to keep resounding in your head and it's a lot. Let's get to it. So like I said, we have typically two types of candles. Yeah, we have the red and we have the green candle. The green candle is the what? Price is going up. It means price is going up. And the red candle means what? Price is what? Declining. Price is going down. I've just got to complete the week so I can explain the candlestick anatomy in full. So give me a little bit of time so I can design my candlestick completely on the charts. Give me some time. Okay. Give me some time to do this one as well. Now, we are going to be talking about candlestick anatomy or candlestick structure. When we say anatomy, we mean the structure, right? Those who study anatomy in school, you're studying the structure of the human body. So we're going to be studying the structure of a candlestick. What makes up a candlestick? What makes a candlestick a candlestick? Now, a candlestick has typically two parts. We have the wick or shadow. Some people call it shadow. The wick or shadow, which is this part. We have the wick or shadow. Wick or shadow. That's what they call it. But the best word is the wick or shadow. I've just got to increase that text a little bit so that you guys can see. Wick or shadow, and then we have the body, right? Then we have the body, right? The same thing for this one. Wick and then body, right? We have wick and then we have body. Now, in a full candlestick, in a full candlestick, a bullish candlestick, this is how a bullish candlestick works. Now, let me explain it and break it down. Now, this is, I'm going to use my brush tool to explain. Now, when stock prices are increasing, typically we have the open of the candlestick to be here. For a bullish candle, we have the open of the candlestick to be here. I'm going to give you a quiz, though. I'm going to give you a quiz. So you're not just learning, you're also going to be attempting some essays. Now, that is the open of the candle, right? Now, what happens typically on a bullish candle is this. When a bullish candle opens, sometimes the sellers push market down, and what happens? Buyers push market back up. So now that up and down movement, that down first movement, then a push up is what creates this shadow. And now when buyers start winning and buyers start going above the open, we start having the green body. When buyers start winning and start going above the open, we start having the green body. Then what happens? Buyers, this is the highest points the buyers got to, and the sellers pushed down until it was able to close here. So we have the close here, right? Now, a bullish candle is any candle that has its close above its open. Did you get that? That has its close above its open, right? By that I mean markets opened here, we came down a bit, and market pushed back up, and we started going up. This is the highest point price got to. Sellers were able to push it down a little bit, and we finally closed at this level. Now, this is the what? Close. This is the close of the candle, and this is the open of the candle. Now, you can see that the close of the candle is above the open, right? And that's what makes a bullish price action bullish. Now, talk about the bearish price action. A bearish price action will come off in this way, where we have sellers open typically here. We open here, and then buyers try to push the price up a bit. Buyers only got up to this point, which is the highest point of the week, and sellers what? Pushed it back down. Sellers got to as low as here, and buyers were able to push it back up again until markets closed here. So now the close of a bearish candle is below, the open is above. You can see the difference. A bullish candle has its close above and has its open below. A bearish candle has its open above and has its close below, right? So that is the anatomy of the candlestick, right? So you can see that it's like a tussle. It's a tussle between buyers and sellers. Right? Where we have, like I explained, I'm going to explain it again. We typically open off on a bearish candle here. Let's say this. I'm using this as a reference. This is our open, this place. Now, buyers were able to push the market up a bit in an intent to like displace it. But what happened? Sellers are stronger. Sellers push it down back. That's why we have a wick. A wick is a presence of like indecision between buyers and sellers, or equality between buyers and sellers. So because there is buyers and sellers of equal volume here, it cancels out and creates this kind of like weak looking thing. And then what happens? The sellers now predominantly push price. They got to as low as here. This is the lowest point, this place. They got to as low as here. But what happens? Buyers now came in and pushed price a bit, and we finally closed here. Now this is the open, and this is the close, right? This is the open, this is the close. Why for a bullish candle, this is the open and this is the close. So you need to get this at the back of your mind. Now, it is important to actually understand the open and close of the candlesticks, because we actually use the open and close to mark out various levels on the chart. There are so many candlestick patterns that we use today that actually take advantage of the open and close. So you need to understand how a bullish candle is formed and how a bearish candle is formed for you to be able to get, things like when we are marking out our order block, where we have our order block to be something like this. We have the bullish candle, the bearish candle. Then we have the bullish one here. So let's say this is a bearish candle. We have the bullish one. Typically, our order block is supposed to be here. Our order block is going to be what? The open of the bearish candle. So it's very important to note the open and close of these candlestick prices. These wicks do not mean anything. These wicks, they most times don't mean anything at all, right? Anything at all. So that's something to actually take note of. Now, that being said, can we now look at candlesticks. Can we now look at these candlesticks? Now, this is, I'm going to typically show you how a H4 candlestick forms. I don't know how to slow it down and show you, but let me replay price. Let me cut price from here. Let's see how this candlestick forms. I need to reduce the speed by a lot, so just please bear with me so we can see how these candles actually work, right? Or how they form in real time. So let's look at it. I'm going to play right now. I don't know if it's going to give the best result, but it's on 0.2x. So let's just look closely at it. Let's look closely at it. So we can see we've opened and oh, it's going a bit faster than I expected. There's an indicator I'm going to add. Candle Faddy, I need you. Alright, let me replay price again. I need you to be watching here. So I'm going to cut Friday price action. I'm going to cut it back to Thursday, and let's look at that. I'm going to cut Friday price action. I'm going to chop it off. Let's chop off Friday. Network is not the best. Now let's chop off Friday. Now I want you to be looking here just to see how the candles form. The next candle that comes out here, around here, be looking here. This is just an indicator that expands the candlesticks. Now this is the daily time frame candle. We are on the H4 time frame. Let's see how the daily candle is going to form. So we've put it to the slowest speed. Let's see how that works. It's going to take a little bit of time, but I want to just show you how that those weak things form. This one just opened and just trade up. Okay, it has not even showed up on the indicator yet. Haba. Why is it moving like this? Did I increase the speed or did I decrease it? Anyways, let me leave this time frame. Let me get like 5 minutes time frame so that we'll be able to see the formations clearly. I need to set something. Sorry. I need to turn this off. Turn this on. Turn off. Okay. What's this one? Okay. So now just be looking at the indicator and seeing how this candle is forming. Just be looking at it. Or have we stopped that? Now look at this H4 candle. You can see the buyers are now going up. And then what happens? Sellers start dropping again. Can see what's happening there. The sellers are pushing the market down. Buyers are trying to like take it up back. It's like it's a tussle. The open of the candle is here. That's why there's a body when the price starts going up a bit. But when the price comes below the body, it turns red. So let's just see who wins at the end of the day. I think it is now extremely slow. It's taking our time. So let's take it. Here you can see the sellers have now finally dropped price, and you can see what happened. It now turned completely red. And you can see what happened. See what's happening when there's a rejection, because these buyers came in here, around here. When there's a rejection, you can see it wicked and then it came back. So, but now sellers are winning. That's why the candle is still red. See, buyers have come in. It became weakened. It became wicked again. So it's just gonna keep doing that until probably the end of the day. See, buyers are trying to like win the game, right? Buyers are trying to like win. Can see what's happening. You can see that whenever buyers come in, it starts to become thin. The candle starts to change to become a what? Starts to become a shadow candle. But now sellers are back in. Sellers are coming in, and when the sellers start selling, the markets, the candle just starts getting full again. That's what I'm going to say. Starts getting full. And you can see that. So I just wanted to show you like the formation of the candlestick. So it's not like it's something that is new. Not like what I'm showing you is like a holy grail, just the excitement of seeing it for the first time, right? So yes, you're going to be seeing more of it in the markets with time to come, and it's actually a very exhilarating experience, and it's something I'm sure you are going to enjoy. So I'm going to stop the bar replay mode now so that we can move on to other things. Now there are candlestick patterns. There are candlestick patterns. In fact, there are candlestick patterns are very, very important, and I'm going to be giving guys the assignment to study a particular PDF. So I'm free now to change my chart back to the main one. Okay, this is the color I've chosen for myself. You can, like I said, you can choose the color that suits you. But beginners, is best to use red and green. But if red actually is a very scary color. So if you want something more neutral, I would say go with white and black for now, where the black means the red and the white means the green, right? So there are candlestick patterns, and the important ones I'm going to talk about are what? These two, and I'm going to give you an assignment to research the rest. Now, we have this particular one. Candlestick patterns are candlestick formations that what predicts or tells you what the market is going to do next. So we have a bullish engulfing. That first candlestick pattern I just drew, that's a bullish engulfing. By the word engulfing, you already get what I mean. It means that the bullish candle engulfed the previous bearish candle. Now this next one we have is what? A bearish engulfing. And we also have we also have a we also have a bullish engulfing. This is the bearish engulfing. That's a bullish engulfing rather. Price engulfed this particular bearish candle with a green candle, and this is a bearish engulfing. Price engulfed the previous green candle, right? This is like typically this is what the word order block simply means. Typically this is what the word order block simply means, right? So we're going to also be looking at that in depth. So 1, 2, 3 I've drawn. There's also another one, a pin bar. A pin bar is also a very powerful candlestick pattern. Now a pin bar can come in form of a hammer, and it can also come in form of a morning star, right? I'm not going to be explaining in details all these things. This is the assignment I'm going to give you. You're going to visit my channel. If you don't know my channel, I have a Telegram channel. I think there are over 24,000 folks there. You're going to visit my channel, and this is where I'll be able to give you quizzes, right, to attempt. You're going to visit my channel. So if you're following this beginner series, make sure you're on that channel. You're going to visit my channel, and I'm going to drop a book there, Trading Bible. It's a really very, very, very big book. You understand? You have to read the book. I'm not trying to discourage you. I'm just trying to tell you how important it is that you should ready your mind for learning. It's not an easy journey. It's not something you just come and have as a piece of cake. You need to be able to put in the work. Obviously, you're here to make money, and money is not free. Money is not cheap. So you need to actually put in the work. So you need to be on that channel. Just search Techris TM on Telegram. Just start Techris TM on Telegram. That's all, and you're going to see the channel. Or you can check my bio on YouTube. It's there. The link is there. Straight up link. I'm going to ask my designer to put it on the screen so that you can actually see it. Techris TM. Just Techris, my name, and then TM. If you just search it on Telegram, it's the first channel that pops up. Join. I'm going to drop the book. You're going to be able to access the book. You're going to learn candlestick patterns. It is very important. It's funny that some advanced traders, people who call themselves pro traders, the mistakes they make today are because they have neglected the most important aspect of trading, which is getting a grounded understanding of how candlesticks actually work. Because each candlestick tells a story. So candlesticks, I tell my students, they are the representation of traders' emotions. When traders was greedy, the market tends to go up. When traders are fearful, the market drops. So it's a representation of the trader's emotion in the market. So your red, green, blue candle is just literally all of us in the market trying to decide where's the price going to and all of that, right? So it is very important you have candlestick patterns at your fingertips. So I'm going to note a few of them. Study tweezers, study pin bars. Pin bars are very important. Tweezers, pin bars, engulfings. These three, please study it. If you're going to do without any other pattern, candlestick pattern, these three, please make sure you study. So pin bars are like something like this. Don't forget to join the channel, Telegram, TechRisk TM, and the quiz is also going to be dropped there. So a pin bar is something like this. We have a bullish pin bar, and we have a bearish pin bar. Right, this one is bearish. And this work is not the best, okay? This is a pin bar. This is how it looks like a hammer. They call it a hammer too. A pin bar, a hammer. So they are very important because most times they show you rejection in price. So they show you rejection in price movement. So let's say price was intending to sell before, but there was a very, very mad rejection by buyers and they were able to push price and close it above here. When it shows up like this, most times the next day or the next candle that's coming out is a buy, right? So you're going to study the candlestick PDF by, I think, Munehisa Homa. It's a very, very interesting PDF. It's going to open your eyes to a lot, and it's going to help you start your journey the right way, right? Help you start the journey the right way. So, that's all for candlestick patterns. We're going to be seeing a lot as we proceed in the course. We're going to be seeing a whole lot. So, let's stay excited, and I would see you guys in the next video. If there are questions, you know where to drop them. Drop them in the comment section. And as usual, if you stay true to the end, you are my most valuable person, my MVP. So just text MVP in the comments. I'm going to be liking every single comment that is written with MVP. I'll see you guys in the next one. Take care.